Good day, grade 10. I am going to be going through task 10.13 and 10.14. You are required to complete 10.15 for week 11. Please refer back to the previous two tasks that we completed, as well as these two tasks that we are going to complete now to complete your task 10.15. So let's get through this. The following is an extract from the pre-adjustment trial balance of Optel dealers. So they've given us the pre-adjustment trial balance, and our year ends the 28th of February 20.3. So now remember that timelines are always important, and when we're dealing with financial statements, one of the most important GAR principles is matching. Everything that is supposed to be in the current financial year should be taken into account, and anything that should not be taken into the financial year should be taken out. Alright, so let's go through our adjustments. The insurance amount includes a new annual insurance contract for 5,310, which expires on the 30th of June 20.3. Please note that it's a prepaid expense. We have paid it in advance, and a prepaid expense is an asset to the business. Alright, so remember, timelines are important. Our year ends, as you can see, our year ends the 28th of February 20.3. Anything after this financial year is in advance. Alright, so remember they said that the total amount of this insurance policy was 5,310 Rand. Let's count how many months the insurance has been prepaid for. So this insurance expires in June. So March would be the 1st, 2nd, 3rd, 4th. So we've paid our insurance 4 months in advance. Alright, so you will divide by the number of months we've paid. So automatically you would think that, let's read this again. The insurance amount includes a new annual insurance contract for that, which expires June. So you would automatically think that it was taken out in July last year. If you count that, it will give you 12 months. So you'll have to divide it by 12. 5,310 divided by 12, we get what we would be paying for our insurance per month, which is 442 Rand 50. Once you have the per month figure, you will then multiply by the number of months that we've prepaid, and we've established that we've prepaid in advance 4 months. So 442 Rand 50 times 4, we get a total of 1,770. Okay, please keep that in mind. Moving along to the next adjustment. The vehicle was serviced during February 20.3. The account 4980 has never been paid. What does that tell you? It is expense payable. Alright, so expenses payable is a liability. Alright, you still have to pay it. This amount will fall in your financial year. Number 3, 160 of the stationery was ordered for the next accounting period. Please take note, next accounting period, but was paid for in February. So it was paid in our financial year, the current financial year, but it's only basically going to be used for the next financial period. So you need to take that out. It is a prepaid expense. And they have given you the 160. And then your interest on your loan. What do they say? Make an adjustment entry for interest on the loan. The loan was taken on the first day of the financial period. Note, interest on loan is charged to the loan account and it is capitalized. What does the term capitalized mean? It means that interest will be added onto the loan. Remember, the the interest on your loan is the cost of borrowing. That's how the banks will make money on the loan that they've lent or loan you. So the word capitalized means that it will be added onto the loan. All right? If it is not capitalized, you will then have to pay that immediate payment upfront on a monthly basis coming from your own account. Whereas capitalized, it will just increase your loan every time. It will be added onto your loan. Not capitalized, it won't be added onto your loan. I hope that makes sense. So let's go to our loan amount. They say loan from WEP Bank, 16% per annum, and it's 80,000. The capital balance is 80,000. So how did I work this out? 80,000 times the 16%. For the year, my loan amount is 12,800 Rand. So we are required to enter it in our journal, our general journal. Journal voucher 1 on the 28th of Feb, we had a prepaid expenses, and we've identified two, the insurance and the stationery. Remember, prepaid expenses are an asset to the business. And remember, what do we usually do with expenses? We usually debit our expenses, but because it does not fall in our financial year, we will put it on the credit side. The value of these two will give you the total amount of your prepaid expense, which will be debited as that is your asset. Then your narration is going to be expenses paid in advance. Please note that I have used two lines for my narration, which will be acceptable in your tests or your activities. You're not allowed to extend over two, just in case you do not have enough space. All right. Journal voucher 2, we had vehicle expenses which were not paid as yet, so that becomes expenses payable. Expenses payable is a liability, that is why it is my account credit. And then the actual expense that should be taken into account this year will be debited as per normal. Our narration is vehicle expense owing. The interest on loan that we worked out, interest on loan is actually an expense that is incurred on the loan that you have taken out. All right. And they told us that the interest is capitalized. So our loan is basically increasing. What is a loan? A loan is a liability, and it increases on your credit side. Okay, interest on loan is the expense to the business, but because it is capitalized, it is increasing your loan, and that is why loan will be credited. Moving along to your general ledger. Remember, loan from WEP Bank is a liability. We had an opening balance of 80,000. And then because our interest on loan is capitalized, it means that our loan is going to increase. All right, so 80,000 plus 12,800, our new amount on our loan is 92,800. The expenses payable for this activity was our vehicle expenses from our GJ, and it was worth 980. Remember, expenses payable is also a liability. It increases on your credit side. Prepaid expenses is an asset. It increases on your debit side and decreases on your credit side. So we had two prepaid expenses that we have identified, and that was our insurance and the stationery. If you tally that up, your prepaid expenses for the financial year is worth 1930. Insurance, we onto our nominal account section, is an expense to the business. What do I do with expenses? I debit expenses. So I'll put the total. Remember, we in the nominal account section, so our opening balance / total will be known as total, okay? Total brought forward of 15,670. Where am I getting these balances from? / totals. I'm getting it from our pre-adjustment to our balance. Okay. Where were we? There. And then remember, this is a prepaid expense. It's not an expense in our current financial year. That is why I'm putting it on our credit side. As soon as the next accounting period reflects, there will be a reversal and it will be taken right back to the debit side. But for now, we are saying it's prepaid and it would be on your credit side. The interest on loan, there was no opening balance, and the expense that incurred was 12,800. Interest on loan is an expense. What do we do with expenses? We put it on the debit side. Vehicle expenses, we had a total brought forward, and this is an expense that is still payable. It is an expense that must be taken into account in our current financial year, which is why I will put it on the debit side. Unlike prepaid expenses, which will be recorded on the credit side, this one will be taken into account on the debit side because it falls and it should be paid within the current financial year. Moving along to the effect on the accounting equation, we for adjustment number 1, it's a prepaid expense. It's account debit because that's an asset, and then your insurance, because it's prepaid, it will increase at owner's equity as well. So plus 1770 plus 1770, no effect at liabilities. Vehicle expense, it is an expense, so it will be debited, and your accrued is a liability, which is why it is credited. So minus 980 at owner's equity because it's the expense for the year, and your liabilities have just increased because it's not yet paid. Very same as the adjustment number 1, prepaid expense, that's the asset. This is the expense that should be paid in the next accounting period. So it's going to be plus 160 at assets, plus 160 at owner's equity. Then your interest on loan. Remember, interest on loan is an expense. It's the cost of borrowing. What do I do with expenses? I debit expenses, and what is an expense? It's owner's equity, so it's minus 12,800 under owner's equity. A loan is a liability, and it should actually be plus 12,800 because your loan is increasing by that amount. Right. Moving along to task 10.14. Let's go back.